Hello students and welcome to the lecture. So students, as you can see here that basically in this lecture we are going to start with the nationalization of banks, PSL and financial inclusion. This is going to be a topic for the discussion and in this particular lecture. And this is going to be the part 1. Okay? Nationalization of banks, PSL and financial inclusion. All of these are different from each other, but all of these are interconnected with each other. Like these three things having some similarities between them. And we will try to understand these similarities. And remember, nationalization of banks, PSL, and financial inclusion are not only important from the general knowledge point of purpose, but it is also important from the current affairs view. Why? Because these things are always remain in the news, direct or indirect way. So that's why the question could be asked. And it is totally depend upon the examiner, like how he is asking you the question, whether in the form of general knowledge or asking you as a current affairs. For example, let's suppose PSL. Just for example, let's assume now the PSL having the target 4%. The government enlarged the target up to 8%. So now the PSL having the target of 8%. Okay. But it is totally depend upon the examiner. If he's asking about the PSL from the current affairs point, like what is the current PSL target, if it is asking or not. If not, then what will happen? Might be the examiner may ask you in which year the PSL scheme was introduced. Okay. Now you will say that was not from current affairs, but it is from general knowledge and all. It is from current affairs and it is also from the general knowledge at the same time. How? The PSL was in news, current affairs. But what happened now in the PSL? They didn't ask you. They ask you when the PSL was started. But relevancy was from current, asking from the general knowledge. That is why it is important to learn about them. Okay. So in this lecture, we are going to talk about the nationalization of banks, nationalization of SBI, then nationalization of banks in 1969, nationalization of banks in 1980. An important point, objectives of nationalization, SBI merger with its associates, priority sector lending, rate of interest for loans under the priority sector, or and the summary of all of these. Okay, so this is going to be our path of action. The nationalization of banks, nationalization of SBI, nationalization of banks in 1969, nationalization of banks in 1980. An important point, objectives of nationalization, SBI merger with its associates, priority sector lending, and rate of interest for loans under the priority sector. And at last, the summary of all of these. But before starting this, we have the small disclaimer over here. And the disclaimer is like, the images used in a slide deck are for educational purposes only. We respect the intellectual property rights of the original creators and owners of these images. If you are the owner of any of the image used in this tag and have any concerns or issues, then please contact us at sathee@iitk.ac.in and we shall remove the images. Alright. So now after understanding the disclaimer, let's begin with the topic. So nationalization of banks. So we know when the Europeans arrived in the country, they had introduced the new system of an economy that is known as the monetary based economy. Okay. And this monetary based economy ultimately made banks as a main key player in the economy. All right. And it's become important for us to go through the banks and ensure their healthy and well-being stability in the economy, because their downfall could impact the country as a whole. But before 1949, in 1947 we got the independence, and now we are talking about 1949. Before 1949, all the commercial banks in India, they were exclusively owned, controlled, and managed by the private entrepreneurs. Okay, and that's why we have to nationalize them, which means we have to put them under the newly constituted Indian government. So the process of nationalization of banks began with the nationalization of RBI on 1st January 1949, with the passing of Reserve Bank Transfer of Public Ownership Act 1948. Okay, like RBI Act was passed in 1934, and then we know the Reserve Bank of India was established in 1935. But it was nationalized by Reserve Bank Transfer of Public Ownership Act 1948. The RBI was nationalized to ensure the greater coordination of countries' monetary, economic, and fiscal policies, but not in the British India, but in independent India. Okay, that's why the Reserve Bank of India got nationalized. After the Reserve Bank of India, we have the nationalization of SBI. Now let's have a talk on this. The first step towards the nationalization of commercial banks. Now we're talking about the main commercial banks, not the central bank like the RBI. That started with the nationalization of Imperial Bank of India as the State Bank of India on 1st July 1955. Now let's have a talk on this. So basically what happened here, like that was the 19th century. Okay, when basically the Britishers established their first presidency bank at Bengal, known as the Bank of Bengal. Following this, the two other presidencies banks were set up, one in Bank of Bombay, another one in Bank of Madras. That's how the Britishers set up the three presidencies bank: Bank of Bengal, Bank of Bombay, Bank of Madras. Okay, all these three presidencies bank worked for several years. Then what happened? That was the year of 1876 when these all three presidencies banks got merged in a single management system. Okay, but when the 20th century was going on, due to the arrival of Britishers in a extreme manner, sorry, due to the arrival of Europeans in an extreme manner, all right, what happened? The Britishers felt that we must merge these banks together, and they merged the banks and established a new bank as Imperial Bank of India. So that's how the Imperial Bank of India came into the picture, by merging the East while existing three presidencies banks. Okay. After this, in 1921, the Imperial Bank was created. After this, when we got independence, that was the year of 1955 when we nationalized the Imperial Bank of India and put it under the control of Indian government on 1st July 1955 and renamed it as a State Bank of India. After this, in 1955, after this, seven state associated banks were also nationalized as the subsidiaries of State Bank of India in 1959. Remember, this happened 4 years down the line after the nationalization of State Bank of India. The State Bank of India got nationalized in 1955. Okay, got nationalized in 1955. And after this, the 7 state associated banks, they got nationalized as the subsidiaries of State Bank of India in 1959. Okay, the 7 associate banks were the State Bank of Hyderabad, then the State Bank of Jaipur and Bikaner, the State Bank of Travancore, the State Bank of Mysore, the State Bank of Patiala, the State Bank of Indore, and the State Bank of Saurashtra. Okay, so these all were the 7 banks that got nationalized and merged with the State Bank of India. Got it? Now let's move forward. So now let's see 1969. In 1969, again, the major nationalization process taken for the banks. Like that was the day of 19 July 1969, when the 14 major commercial banks, which having the deposit exceeding rupees 50 crores. Okay, like you can say these all were the private banks existing in India, and all were having the deposit exceeding rupees 50 crores. The decision was taken on 19 July 1969 to nationalize all these banks. As a result of this, the 14 major commercial banks got nationalized, like Allahabad Bank, then the Bank of Baroda, Bank of India, Bank of Maharashtra, Canara Bank, and Central Bank of India. Then Dena Bank, Indian Bank, Indian Overseas Bank, Punjab National Bank, Syndicate Bank, Union Bank of India, United Bank of India, United Commercial Bank, that is known as the UCO Bank nowadays. So these were the 14 major banks. Again, let's see them. Allahabad Bank, Bank of Baroda, Bank of India, Bank of Maharashtra, Canara Bank, and then the Central Bank of India. Dena Bank, Indian Bank, Indian Overseas Bank, Punjab National Bank, Syndicate Bank, Union Bank of India, United Bank of India, United Commercial Bank, also known as UCO Bank. Okay. Now, nationalization of banks in 1980. After 1969, again the major nationalization process undertaken by the government, and now that was happened on 15th April 1980. So that was on 15 April 1980. The other 6 more commercial banks were chosen to be nationalized, were having the deposit above rupees 200 crores. Okay, like we could say, those commercial banks we're talking about, those were having the deposit of 50 crores, more than 50 crores. Now, these 6 commercial banks we're talking about, they are having the deposit above rupees 200 crores. These banks were Andhra Bank, Corporation Bank, New Bank of India, Punjab and Sindh Bank, Oriental Bank of Commerce, Vijaya Bank. Note, there is an important note for us. New Bank of India was later merged with the Punjab National Bank in the year of 1993. Like we could say, that got nationalized in 1980 and later got merged with the Punjab National Bank, which is the second largest public sector bank after the State Bank of India. Okay. Now, there is an important point we must be know about. So, because of the nationalization, the major segment of the banking sector came under the control of the government. Like as I have told you, basically, prior to this, okay, the major segment of the banking sector, which is a critical sector for economy, as we had discussed, that was actually under the control of private players. All right, the private players were controlling the most of the areas, and because those organizations were profit oriented, not public oriented, so the government did the nationalization. After the nationalization, the major segment of the banking sector that came under the control of the government. All right. So now the government could do various kind of things. Like the bank is actually the greedy entity. It is an brutal truth. Okay. They want to maximize their profit and earn. So that's why before the nationalization, whatever bank we're talking about, majority of these banks have their branches in the urban areas where they have the businessmen, they have the industrialists, and because of this, they having the major deposits from them. But in the unbanked rural and the semi-urban areas, they did not open their branches. So the people of those areas were not getting any access to the banks. Okay. So after this, the nationalization of banks, this imparted the major impetus to the branch expansion in unbanked, rural, and semi-urban areas, which in turn resulted in the huge deposit mobilization, thereby giving boost to the overall savings of the rate of the economy. Okay, and it is also resulted in the scaling up of lending to the agriculture and its allied sectors. Got it? Now, let's have a look of what were the objectives of nationalization. Why did we do the nationalization? First, the Banking Companies Acquisition and Transfer of Undertakings Act 1970. The Banking Companies Acquisition and Transfer of Undertakings Act 1970, under which the 14 banks were nationalized with effect from 19 July 1969. Okay, that spelled the main objective was to serve the better needs of the development of the economy with the conformity with the national policy and objectives for matters connected therewith or incidental thereto. Like as I have told you, the government generally having the public oriented policy, but these banks were under the control of private players. So that's why these banks were having the profit oriented approach. So by nationalize them, when we did a nationalization and when we put them under the control of the government, so because of this, now the bank's policy could be aligned with the national policy because the controller of both of them is the same, the government. The bank policy is being formed by the government as well as the national policy is being formed by the government. Okay, so the objectives and the public oriented approach could be ensured in the bank's policies too. The main objectives included: first, to mobilize the savings of the people to the largest possible extent and to utilize them for some productive purposes. Second, to ensure the operations of banking system for a larger social purpose and to subject them to the close public regulation. Third, to meet the legitimate credit needs of private sector industry and trade, big or small. Okay, so that the bank could be fair for each and everyone instead of favoring few only. To meet in an increasing manner the needs of productive sectors of the economy, and in particular those of farmers, small scale industrialists, and self employed professional groups. Then, the objectives of nationalization. What were the objectives of nationalization? Let's have a look on them as well. First is to actively foster the growth of the new and progressive entrepreneurs and credit fresh opportunities for hitherto neglected and backward areas in different parts of the country. Okay. Then, to curb the use of bank credit for speculative and other unproductive purposes. Then, to provide adequate training and reasonable terms of service to the bank staff. Then, to considerably extend the branch network of bank in all parts of the country. And last, reduce the regional and sectoral imbalance in banking and through that in economic development. Now, the SPI merger with its associates. So the five associates and the Bharatiya Mahila Bank became part of the State Bank of India on 1st April 2017, catapulting the country's largest lender to amongst the top 50 banks in the world. And these were the State of Bikaner, the State Bank of Bikaner and Jaipur, the State Bank of Hyderabad, the State Bank of Mysore, the State Bank of Patiala, the State Bank of Travancore, and then the Bharatiya Mahila Bank also merged with the SPI with effect from 1st April 2017. The merged entity resulted in the deposit base of more than rupees 20 lakh crores and advances level of more than 18.5 lakh crores. Post-merger, the bank will rationalize its branch network by relocating some of the branches to the maximum reach. This will help the bank optimize its operation and improve the profitability. Now, what is the priority sector lending? The priority sector lending is the full form of acronym PCL. Okay. Now, talking about this PCL, what is priority sector lending? Priority sector are all those sectors that is very important for the economic development of the country. The priority sector lending means providing the institutional credit to these sectors and segments as it is difficult for these sectors to get credit. The priority sector lending is an important role given by the Reserve Bank of India to the banks for providing a specified portion of the bank lending to few specific sectors. Now, what are the different categories and sectors under the priority sector lending? Agriculture, micro, small and medium enterprises, export credit, education, housing, social infrastructure, renewable energy, and others. Now, targets and sub-targets for banks under the priority sector lending. Here is a category. Then, domestic scheduled commercial banks, from which we exclude the RRBs, and foreign banks that having the 20 branches and above. On the other sides, we have the foreign banks which having the less than 20 branches. Now, total priority sector lending. 40% of adjusted net bank credit or credit equivalent amount of off-balance sheet exposure, whichever is higher. In this, 40% of adjusted net bank credit or credit equivalent amount of off-balance sheet exposure, whichever is higher, to be achieved in phased manner by 2020. Agriculture, 80% of an ANBC or credit equivalent amount of off-balance sheet exposure, whichever is higher, within the 18% target for agriculture. A target of 8% of ANBC or credit equivalent amount of off-balance sheet exposure, whichever is higher, is prescribed for the small and marginal farmers. In this, it is not applicable. Then micro enterprises, 7.5% of ANBC or credit equivalent amount of off-balance sheet exposure, whichever is higher, again not applicable. Advances to weaker section, 10% of A and BC or credit equivalent amount of off-balance sheet exposure, whichever is higher. Again, here is not applicable. Now let's have a priority sector lending on this. Like targets and classification. Categories under agriculture are as follow. The activities covered under agriculture are classified into the three subcategories, like the farm credit, agriculture infrastructure, and ancillary activities. Limit prescribed for loan sanctions to micro, small, and medium enterprises to be classified as priority sector lending. For a classification under priority sector, no limits prescribed for banks loan sanction to the micro, small, and medium enterprises engaged in the manufacture or production of goods under any industry specified in the first schedule to the Industry Development and Regulation Act 1951. Bank loans to micro, small, and medium enterprises engaged in providing or rendering of services defined in terms of investment in equipment under MSMED Act 2006, irrespective of the loans, are eligible for classification under the priority sector, working in effect from March 1, 2018. Now, loan limit for education under priority sector. Loans to individual for educational purposes, including vocational courses up to 10 lakh respective of the sanction amount, are eligible for classification under the priority sector. Priority sector lending. Bank loans up to a limit of 5 crore per borrower for building social infrastructure for activities namely schools, healthcare facilities, drinking water facilities, and sanitation facilities in Tier 2 to Tier 4 centers eligible for classification under the priority sector. Bank credit to the microfinance institution extended for on lending to individuals, member of self-help groups, and JLJs for water and sanitation facility, also eligible for classification as priority sector loans under the social infrastructure. Then priority sector lending. Credit limits for loans for renewable energy under priority sector lending. Bank loans up to limit of 15 crores to borrowers for purpose like solar-based power generation, biomass-based power generators, windmills, micro hydro plants, and for non-conventional energy based public utilities, wise street lighting system, remote village electrification, eligible to be classified under the priority sector loans under renewable energy. For individual households, the loan limit is 10 lakh per borrower. Limit for housing loans under priority sector. Loans individuals to up to 28 lakhs in metropolitan cities with population of 10 lakh and above, and loans up to 20 lakhs in other centers for purchase construction of dwelling unit per family, eligible provided the overall cost of the dwelling unit in the metropolitan center and at the centers does not exceed 35 lakh and 25 lakhs respectively. Housing loan to banks own employees are not eligible for classification under the priority sector lending. Who all are included under the weaker section category under priority sector lending? Priority sector loans to the following borrowers eligible to be considered under the weaker section category. First, small and marginal farmers. Second, artisans, village and cotton industries where individual credit limits not exceed 1 lakh. Third, beneficiaries under the government-sponsored schemes such as National Rural Livelihood Mission, National Urban Livelihood Mission, and Self-Employed Scheme for Rehabilitation of Manual Scavengers. Fourth, scheduled castes and scheduled tribes. Fifth, beneficiaries of differential rate of interest scheme. Sixth, self-help groups. Seven, distressed farmers indebted to the non-institutional lenders. Thereafter, eighth, distressed person other than farmers with loan amount not exceeding 1 lakh per borrower to prepay their debt to the institutional lenders. 8th, individual woman beneficiary up to 1 lakh per borrower. 9th, person with disability. 10. Overdrafts up to 5,000 under Pradhan Mantri Jan Dhan Yojana accounts, provided the borrower's household income does not exceed rupees 1 lakh for rural areas and 1 lakh 6,000 for non-rural areas. Then, minority communities as may be notified by the Government of India from time to time. Note, bank credit to the MFIs, NBFCs, MS societies, etc. extended for on non-lending to the individuals and also to the members of SHGs, SLGs, eligible for categorization as priority sector advance under respective categories, waste, agriculture, micro, small and medium enterprises, social infrastructure and others. Now, what is the priority sector lending certificate? Mechanism to enable banks to achieve the priority sector lending target and sub-targets by purchase of 3 instruments in the event of shortfall. These also incentivize surplus banks and allows them to sell their excess instrument over targets, thereby enhancing lending to the categories under priority sector. Under this mechanism, the seller sells fulfillment of priority sector obligations and the buyer buys the obligation with no transfer of risk or loan assets. Rate of interest for loans under the priority sector lending. Rate of interest on banks loans will be as per that is issued by the Department of Banking Regulation by RBI from time to time. Priority sector guidelines do not lay any preferential rate of interest for priority sector loans. Recent updates. 8% for ANBC and credit equivalent amount balance sheet. Then 7.50 for ANBC and COB. It is as per the MSME Act 2006 for MSMEs and other for the private sector lending without any credit cap. Here we have finished the topic. Now it's a part for summary. We have seen the nationalization of banks like historical context, key nationalization events. Then we have seen the 14 commercial major banks that got nationalized, then 6 other additional banks, then impact of the nationalization, objectives of the nationalization, like Banking Companies Act 1970, mergers, their definitions we have seen, categories under PSL we have seen, targets and sub-targets for banks under PSL we have seen, specific loan limits we have seen under the PSL, weaker section category PSL LC क्या होता है, okay, priority sector lending certificates we have seen, recent updates on PSL we have seen. So with this note, we have finished this topic. It is requested to all of you kindly revise the facts and figures that all we have discussed in this lecture and keep yourself ready for the next lecture. With this note, let's end this lecture and thank you.